Hello everyone, today's video is all about PAYE settlement arrangements, otherwise known as PSAs. So what are all these about? Well, basically if you're an employer and you provide certain perks or benefits or gifts to employees, but you don't want them to suffer income tax and national insurance on those, then you can basically pick up the tab as the employer. So pay for the income tax that the employee would have otherwise paid, and also pay some employers' national insurance. So the reason being because it takes the edge off, it takes the shine off a gift on the employee if they have to then pay tax accordingly. So it's just a deal that you do as an employer with HMRC to say, look, this is the list of benefits we're going to do. We want to pick up the tab on that, basically. Now, let's get into the detail. I'm going to read this because it's very prescriptive. So basically, the kind of things that you can include in a pay-as-you-earn settlement agreement, the expenses and benefits, but they have to be minor, irregular, and impracticable. Okay, so they're the three types. So what is a minor expenses? Minor expenses and benefits would be things like incentive awards, for example, long-term service awards, telephone bills, small gifts and vouchers, and staff entertaining, for example, buying a ticket for a concert. So also minor expenses would be non-business expenses while travelling overnight on business that are over the daily limit. So remember, if you are travelling on business and you are within the daily limit, then there is no tax. So what are just a reminder of the exempt amounts for business travel, the daily limit. So you won't have to report anything to HMRC if you pay no more than £5 per night to your employee for travel in the UK and £10 a night for travel outside the UK. Okay, so also no need to include trivial benefits in your PSA. So what exactly is a trivial benefit? So trivial benefits, well, you don't have to pay any tax on these if all of the following apply. It cost you as the employer less than £50 to provide it. It isn't cash or a cash voucher. It isn't a reward for the employee's work or performance, and it's not in the employee's terms of their contracts. So if all those things apply, then it's known as a trivial benefit in tax jargon, trivial benefit, and you don't need to let HMRC know about it, nothing to report, no tax to pay. Okay, so examples of trivial benefits, by the way: taking a group of employees out for a meal to celebrate someone's birthday, member of staff, buying each employee a Christmas present, and flowers on the birth of a new baby. So they're examples of trivial benefits. And like I said, if you meet those rules that I've just said, then nothing to report on that. So what else on the PSA? So the second strand, remember there's minor, irregular, and impracticable. The second one is irregular, so irregular expenses and benefits. So they're not paid at regular intervals, for example, weekly or monthly. They are also things that employees do not have a contractual right to. So things like relocation expenses. If you've paid a certain amount to your member of staff for relocating from one office to another. Now remember, the first £8,000 is tax-free, but if it's over £8,000, then that is an example of an irregular benefit. Cost of attending overseas conferences, expenses of a spouse accompanying an employee abroad, and the other example on HMRC's website is the use of a company holiday flat. Now that would be nice. But they're examples of irregular benefits. So the third strand of expenses and benefits that qualify for the pay-as-you-earn settlement arrangement are what we call impracticable. So HMRC say that impracticable expenses and benefits are things that are difficult to place a value on or to divide up between individual employees. So things like staff entertainment, that is not exempt. Now remember, there is a certain limit on annual events for staff. £150 per head plus partners for Christmas parties or summer events, but that's an annual event, not just regular staff entertaining. Personal care expenses. So the example that HMRC have on their website is hairdressing. I don't know why you can't put a value on hairdressing. I know how much my barber charges. It's extortionate even for my wonderful mane. But that's what they say. That's an example of an impracticable expense that, you know, it would be difficult to put a value on, and you can arrange to pay for personal care expenses for the tax thereon on behalf of your employee. So what it means is all these things are items where you basically give these perks, these expenses to your staff, and you say, okay, there is no tax on that. You as the employer will pick up the bill. And things that cannot be covered under a PSA are the usual, what I would call the big ticket items that would appear on your P11D, things like company cars, cash bonuses, and beneficial loans, if your loans to staff. But all those other things, if they fall in those categories, you can get a PSA, and you basically write to HMRC, tell them what it is, why you think that it qualifies, and you agree that you will pick up the tax bill, so your employees don't suffer the tax on that perk or gift or expense, whatever, call it what you will. And you also pay employers Class 1B insurance. Not often you come across Class 1B, but if you do a PSA, then you will pay employers Class 1B, which is the same rate as employers Class 1A that you would pay on P11D benefits, 13.8%. So that's just an overview on PSAs, pay-as-you-earn settlement arrangements with HMRC, where you pick up the tax bill on a gift, a perk, an expense to a member of staff, which if you didn't, it would soften the impact and make it not so good if the employee has to pay for the tax on that themselves. So you pay the tax on their behalf, as well as the employer's Class 1B national insurance. So if you like this video, please do subscribe right there, and I will see you soon.